Greetings all, Benny Reese West. Hope you had a good week. We're going to jump in and have a look at some uranium this week. Before I do, just a quick little announcement. A little shout out to my man Red Devil, who had me on his channel through this week, and we rapped about Denison a little bit. So if you want to have a look at our collaboration, just jumped in there and had a little bit of a look at Denison and just compared some ideas. I'll put a link in the description to that video. So do go ahead, check that out, give it a like, subscribe to my man. He's very good. Does things slightly different from me, but many different ideas is what's going to give you the big rounded picture, I think. So for me this week, I'm going to have a look at the ETFs, and I think there's some interesting stuff just happening down there on the lower time frame, something to grab our attention, something that might start to make the space pick up. So let's jump in and take a look. So we're just going to start out here. We're just going to have a quick look at the weekly on URA here. And, you know, the indicators are telling us more or less what we can see. RSI is dead flat. We're not going anywhere. We've got little momentum. But just looking at this is kind of interesting. The True Strength Index is just starting to maybe turn back up. So we'll have a little look at this. But, of course, what we have been concentrating on for the last few weeks is this little range that we've been in. So kind of seeing some signs that perhaps we're starting to climb away from that a little bit. Not there yet, but I think we're getting closer. So we haven't looked at the cloud for a while because obviously since the trend failed, we're a long way away from it on the weekly. It's not really going to give us much help. But what we can see, of course, is that the Tenkan-Sen, the slow-moving line, the fast-moving line is flat, which is this is just a representation of the last 9 trading bars, the average price. So we can see that that's going flat, meaning that the market has stopped making progress, which, of course, we already know. So this midpoint, the reason why I love this indicator so much is because it's a bit of an all-in-one. It's a bit of an all-in-one one-stop shop for us. Is that Tenkan-Sen almost always lines up on the 50% retracement line. So that is, of course, the first thing we have to beat if we're going to break away from this range and go back to challenge the top side. But look, whilst ever we're standing between the Tenkan-Sen and the Kijun-Sen as we are here, that just means the market's in balance between time and price. So this isn't necessarily a bad thing because we've talked about this before. When the market gets too hot and the lines get too far away from each other, we need a pause to gather ourselves, let everything come back into balance between price and time, which we've kind of got. And then we can go from there. Now, the other thing I'm just watching is this Chikou span, the lagging span. So it's going to start to run into the candle. So I would hope that these candles are going to give it support, which means it'll just sort of push that back up to those sort of areas, which sort of feeds into my overall theme that I'm kind of looking at for the market. So in further confirmation that we're just sort of sitting right in the middle, this is the VWAP for the year, and we're anchored off the start of the year here, just started off January. So our yearly VWAP, we're sitting right on it. We've closed just ever so slightly below it this week, but it just backs up further that the market is just balanced, and to me just looks poised to maybe start to make a move. And so at this point, my expectations remain unchanged, which is I'm expecting a broad trading range for most of this year. I'm not expecting a lot of progress, but I could be wrong. But that is just what I'm sort of think. I still think there's no reason for me to. Well, look, the market's not giving me any reason yet. It's still very early in the piece, but I'm still thinking that this is what's going to happen. But time will tell. So I think the other thing we've just got to keep in mind is the seasonality factors that might be starting to come into the market. Now, we can see here March is traditionally, even though we've had an up month, but we haven't really gone anywhere, but March has only been up in URA 35% of the time, down 64% of the time. And the average trim mean range, I just took out the trim mean because there is... The Fukushima meltdown was in March, and that range was a 50% range. So we took that out because it's a bit of an outlier. But nonetheless, I don't think that is important. But we just look. I mean, April's down more than it's up. Okay, we're coming into more the seasonally weak sort of times from history. Obviously May's the worst. May's down 76% of the time. Could be reasons. You can come up with whatever reason you want. Or I'm not telling you why it's happening. I'm just telling you that is what happens. Well, that is what has happened over the life of this stock. So we do have to keep the seasonality factors in mind. The fact that we are now coming into traditionally some perhaps weaker times, right? So we have for the last few weeks been talking about ranges. The fact that we're range bound And can we read signs within the ranges to tell us that something's going to happen? Now, I have been doing a bit of Wyckoff sort of schematic. Don't hang your hat on that. It's just more, can I see something here that that I can lean into? Sometimes you can, sometimes you can't. Some of the stocks look better than the others. But I think the one thing, I mean, you can put that aside. I think the one thing that I like here, and this is what I'm sort of concentrating on now, is not so much the range, but the range, but we've got this hammer candle, which, this day on the 14th, last Thursday, really made quite a nice looking hammer candle in all the stocks, but most importantly for me, it sort of just clipped down and made new lows. But then in the way it's moved away from that, this is what I want to concentrate on this week, because I think the way that it's moved away is much better. So I think that the structure of the market through here is much, much better than it was through here. It looks more promising to me. Now, I think this is how I drew it up last week. This is, I mean, it looks like it's kind of conformed to that. And if it has, that means that what I drew was an absolute fluke. There's no way that I know it. I'm not trying to predict what's going on. It was just an absolute fluke that it happened to just sort of conform a little bit towards what I'm seeing. But I'm sort of looking at this. I mean, I wouldn't have said that's a great spring. I'm sort of looking at this now and going, okay, well, I'm happy to put all this stuff in the past aside, because I want to concentrate more on what's going on here, because I think this is where the new point of interest is. So I'm just going to put the Wyckoff away for now, because for me it's kind of done its job, but just down here on this short time frame. But I'm not as interested in this sort of schematic building as much as I'm interested in the way that price is now progressing. And that's the thing with any type of analysis. If it's useful, use it. If it's starting to not be as useful and it's starting to move into the rear vision mirror, put it aside, move on to something else. What can you anchor yourself on right now? So I think right here and now, this price structure looks good. Now, the first thing I'd see is, okay, we had this sort of prior trend that kind of failed us, right? Let's just change that so it makes it a little bit more readable. We had this sort of nice trend. That trend was only trending at just on the scale that I've got the chart set, the angle of that trend was 10%. Okay, obviously it changes if you start scrolling the chart around. But my point is, when I start looking at this trend, we've now got a steeper looking trend, and we've got one that looks much more concrete. Okay, now the one thing I'd look at here is, when we're looking at this, even though we got higher highs and higher lows, you can see each pullback with the retracement on each pullback was very deep, until finally we got up here to make this higher high, and then we kind of failed in three waves back down like that. I'm not sure that we're going to do that this time. This looks better. So the first thing is the retracement that it's held. So you can see on these moves that the retracements were quite deep. They were way through that 61.8, which, that's not some sort of golden rule. It's just a rule of thumb. It's just, I like to see trends. I just like to see that hold. It just gives me a little bit more confidence when the market starts to behave in that manner. It just, to me, suggests that the trend is going to be better. So what we got here, I mean, we had a slight break, but it's more or less held, and then we've extended. First thing I go to, pitchfork trade. We've hit the center line, okay? It's just just trying to get that right on there. So, we hit the center line. So the pitchfork itself is pretty much done its job. But one of the trading factors around the pitchfork is that once it hits the center line, that's when it'll start to get a bit indecisive before it decides if it's going to make its next play. So we can sort of see it here, even though it busted through, it's just sort of started to struggle, right? And this now starts to look a bit more like a classic Elliott structure. Now, I would look at this and go, okay, we've had a move up, a move down, then we've had a move up that's extended. Now, it's only gone a little bit more than 100%. So whilst this could still be a valid third wave in the progression, because this is starting to look very much like how you'd expect wave 4 to pan out, okay, especially with a sharp correction in wave 2 that came right down into the retracement zone. But what I would suggest is if this is going to be a third wave and this is going to be a fourth wave, well then, because the first wave and the third wave have tended towards equality, I would expect the fifth wave to be longer than both of those. So this is just possible path. Okay, not a prediction. it's just a sort of a bit of a model of potential. So, and this is only based off a model based off the potential of what historical patterns have told us. That's it. It's nothing more than that. Okay, I'm not trying to tell you this is what's going to happen. I'm not suggesting it will happen. I'm just more mapping out a path to see if price does go this way. So where would I expect the extensions? Well, this is the length of wave one projected off the 23.6% retracement. So, it can come. Usually the wave 4 expectation is in here, but of course if we overlap one, that excludes it from being an impulse. So I'm kind of expecting maybe more it's going to be like that, but who knows? Only time will tell. But for the sake of argument, it was going to take it off this. What would that give us? Well, that would give us potentially here, I would suggest, or potentially up to here, just potentially. Okay, somewhere up there. Okay, maybe you're talking something like this. I don't know. I don't know if that's going to happen, but this is just one way it could potentially unfold. But I think the thing is, what I'm trying to get at is, okay, just say something like this did happen, and we've got these areas up here. What do these areas mean? Well, they would kind of tie into some of this structure. Okay, just up here. I don't know if that's going to happen. It could. I don't know. But I think what I'm saying is that if we do, because this does look like some sort of impulsive new trend forming up, where is it going to take us? I'm just sort of thinking about what sort of areas could we then get to within my expectation. But if this was going to happen, well, let me take all this stuff off, and then I'll just show you how it builds into the overall expectation I have of the market. Here is the range that we've been in. Expand that range. Where is this range now topping out? Okay, 100% expansion of that range around the highs. Okay, so all I'm saying, what I'm getting at is that, if this somehow moves up to here, then I would expect that we get like this, somewhere up here, and then what would happen? I would expect, this is just what I think is going to happen through the year, that then we're going to come back down again. Okay, we might do this, then we might get a spring, and then we might start doing this, and all of a sudden we bust through and we're on our way. That is just the expectation. I don't know if that's going to happen. I'm just thinking that that's what will happen, that we're just going to have some time where we bounce around like this before we move on. Now, what lies between these two potential targets on the upside? Well, that would just sort of represent around about half of the range that we've got here. So, it's just how you could sort of tie it together, right? I mean, like I said, maybe what we get, we come up, we hit this, and then we're back down like this, maybe just testing on the side of that, coming back into that, before then we go up and we hit that, and then we back down, that, back down, then we're into the next range, that sort of thing. I don't know if it's going to happen like that, of course, but I'm just building a plan around what I can see. But you know what? Like, throw all that out the window, and honestly, what do we just have here? We've just got a trend that's developing. We've just touched out of that. We just want to see an acceleration out of this trend. Okay. Then what we'll be doing, we'll be looking at a trend of the next degree that's running steeper. But what we do have then is a good trend. Okay. You get the point. So look, I was going to do URNM and URMJ, but honestly, you can go back over your own charts and they will basically, they'll more or less tell you the same thing, okay? And the thing remains the same. Here is the range that we're in. What I'm expecting is that we're going to bust out of this range. The range will expand, okay, up to test the top of the old highs before it more than likely fails back down to retest the bottom of this again before we rally further. I don't know how long it's going to take. I don't even know if that's what's going to happen. You know what might happen? We might just do this. Not impossible. Could do that. Or you know what else we could do? We could do this. I don't know. Also possible. We just have to wait and see how it pans out. But until the market tells me something different, that is still what I'm expecting. Okay, a range-bound year before we rally further. So let's see what happens. Don't forget to check out that video on Denison. And thanks for everyone that's liking, subscribing, and supporting the channel. Appreciate it very much. I'll see you next week. Bye for now.